Bill Jackson, Director of Program Development, focusing on expanding our product offering to PEOs in other lines of insurance outside of workers' compensation. Things like employment practices liability, cyber or privacy liability, and other potential property and casualty products. EPLI stands for Employment Practices Liability. It's a coverage that, quite frankly, has gotten more and more play in recent years. Companies consider workers' compensation as a must-have. From what I'm seeing, EPLI is coming right behind workers' compensation as a must-have coverage. What's causing that? It's the amount of claims that's starting to take place, the frequency of employment practice liability claims and lawsuits has increased tremendously in recent years. And it's not just a large company problem, it's also smaller companies under 100 employees. It's roughly 40-60 in terms of roughly 40% of the companies, even under 100 employees, are exposed and getting more claims in terms of employment practice lawsuits. It's not just a bad economy. I think it's just a realization that that type of exposure and the type of claims that are taking place are becoming more prevalent. Education, if you will. Attorneys who understand areas where they can potentially target. Employees talk to employees. News media, more prevalent than ever. All the social media. Everybody's more educated on those type of claims in the workplace, whereas before, file a claim with the EEOC and it may not be nearly as high profile or certainly as widespread in terms of people hearing about it, people understanding about it, talking about it. So social media today helps spread a lot of news. I think with the internet and so forth, a lot of that's what's caused, certainly I think the economy may be a factor of that as well. If a company has employees, they should be buying employment practices liability insurance. It's the same thing as workers' comp. They've got exposure and they need to deal with it. The average cost has gone up now to over $270,000 per EPLI claim, and that includes litigation costs, costs to defend it, as well as any settlement or lawsuit costs that may arise out of the final determination. So a company is going to be out a tremendous amount of cost even if they're not in the wrong, or even if they end up winning the lawsuit. They're still going to have the litigation costs with that. Most smaller companies have in no way budgeted for that or prepared for that type of cost. And so the financial ramifications can be very serious, especially for a smaller company. It is a misconception that companies think that they're already buying EPLI coverage as a part of either a business owner's policy or a liability package policy. Some policies do offer a limited amount of EPLI coverage as a part of their offering, but in most cases, the limits that are offered nowhere near cover the exposure that they're exposed to in EPLI. And so it's very important that a company look at those policies. And in many cases, buying a standalone EPLI policy is the only way to get the amount of coverage you need to cover the exposure. EPLI claims have become much more common in our workplace. We see a lot of statistics from the Equal Opportunity Employment Commission. Even that doesn't tell us how many claims, because there are a number of claims that aren't even reported. But on average, 550 claims are filed every day in an employment practices liability. And we're seeing the number of instances in terms of insurance companies excluding certain types of EPLI claims and becoming more limited on the type of claims they will cover because of that. Wage and hour litigation, because it has become so prevalent, in fact, it's tripled since 1997, the incidence of those claims. It's also the most prevalent class action type of employment practice claim. It's becoming more costly. Insurance companies now are beginning to limit the amount of wage and hour coverage that they will give certain employers, may exclude it entirely or severely limit the amount of settlement costs and or litigation costs that they will cover. So it's very important that a business owner scrutinize their policy, make sure what coverage they're really getting in that area. EPLI insurance covers just about any type of discrimination claim, whether that be based on age, gender, any type of American Disabilities Acts type of violations, sexual harassment, failure to hire, failure to promote, in some case libel, slander, some types of third-party claims and third-party vendors actually can be covered. It's very important for a client to understand what they're getting in their policy, what acts they're concerned about, make sure they are covered, and make sure that they do have limits to cover those types of exposures. EPLI carriers, when they're looking at a particular type of risk, some of the basic things that they look at to underwrite it are the type of class of business that the company is involved in, what is their past claims experience in EPLI, what are their HR practices, and what are the risk management type of practices in terms of how they manage their workplace. Then they're going to look at the number of employees that they have, and they're going to base the premium that they charge on all of those factors. Why we're focused on PEOs and when it comes to EPLI insurance, a PEO actually offers more human resource type support for the small company than a small company can get on its own. And so the EPLI product really fits well with the PEO marketplace. We have a special product with a company called Allied World that's not based only on employee count, but the premium is based on payroll. So it gives the company the ability to pay as you go based on their payroll. RiskTransfer focuses on PEOs every day. We're constantly innovating, constantly looking for ways to help our PEOs understand the risk, understand their client companies, regardless of the type of coverage. So in terms of EPLI, we offer also the risk management type of expertise that helps a company understand what type of exposure they have, how to mitigate and eliminate that exposure. All carriers are not the same when it comes to EPLI coverage. Some are very limited in the type of claims that they will cover and the limits they will offer, the amount of retention, whether it's 10, 15, 25,000, depending on the class of business. So all factors are different by company. The key thing that a company should be looking at when they consider EPLI coverage is not only the policy being offered, the coverage is being offered, but what kind of risk management support do they offer in addition to the actual policies to support the client company as they deal with daily EPLI type of exposure and risk. Some companies offer at least an hour a month for free attorney consultation. Others offer much more support than that in terms of information, job descriptions, anything to do with the HR function. You want to make sure that you're getting and understand all the services that the carrier may offer to support their policy. Pay-as-you-go feature is something that RiskTransfer offers exclusively in conjunction with AWAC, Allied World, our EPLI carrier. The pay-as-you-go function isn't done anywhere else in the marketplace. It's unique. It's based on payroll as opposed to employee count that all other carriers offer. It allows a company to, again, manage their premium payouts as they go based on their payroll throughout the year. The other thing about the policy that's unique is if their payroll comes in lower than what the premium was originally quoted, then they actually pay that amount. If they increase by up to 25%, there is no additional premium for that 25% growth. They only pay for anything above 25%. So it's an outstanding policy that we've developed with AWAC. It's unique to the PEO marketplace. EPLI coverage is not expensive. It's amazing when you consider the exposure you have and the amount of premium you pay. For instance, a 10 to 15 employee company can get $1 million worth of coverage on an annual basis for as little as $1,000 to $1,200 with a $10,000 deductible. It depends, of course, on the class of business they're in, their own EPLI experience, but for the amount of exposure that you cover, for the premium you pay, I think it's the best value in insurance today. EPLI coverage for a lot of employers is not a mandatory coverage in their mind. They'll buy workers' comp, they'll buy general liability, they'll buy property coverage annually like clockwork. EPLI needs to become that same type of mandatory coverage in their mind, especially when you consider these stats. General liability and property claims actually aren't as prevalent, or I should say, employment practices liability is probably the most misunderstood coverage in commercial insurance. It's becoming more high profile. Companies are either being hit with claims or they still just haven't been educated about it yet. I think a company, when they consider this stat, needs to consider it as a mandatory coverage when you consider that they're more likely to have an EPLI claim than either a property or a liability claim. And yet they wouldn't be caught dead not buying property or general liability. So why not buy EPLI? You've got the exposure, it's more prevalent to probably have a claim. Don't expose your business to that type of coverage or that type of exposure when you don't have to. Consider RiskTransfer as your EPLI partner because we understand the exposure, we understand it for both PEOs and temp staffing as well as anyone, and we have the risk management service to back up coverage for the exposure and the service that you need.